Morning all, how are we all doing? So I'm late this morning. I haven't had a chance to look at the news or anything this morning. Always late. How are we all doing? Morning, Peter. Looks like payday today. Hopefully. We will see. Morning, JC. Morning, Ladder. Morning, Burke. Morning, Monkey. Morning, Kennelly. Morning, Virginia. Not the end of the month yet. No, it's not payday. You only get paid at the end of the month. That'd be nice, wouldn't it? Morning, Amy. Morning, Evil. Right. Let's have a quick look at where we are. Haven't even opened my terminal yet. US dollar CAD's rallying. US dollar Rien's rallying. US dollar Swiss is on the move as well. So US dollar's on the move, which is good. We got a gap on the DAX to the upside. And we did start the rollover yesterday on the DAX. So potential drop day today. If we are going to get this strength on the US dollar, we will find the US indices will come down today as well, which will help the DAX down. So could be a big drop day today on DAX. We will have a look. I'm old-fashioned, paid weekly. Blimey. Do they still do that? Morning, Gavin. Morning, Neo. Do they still pay your people weekly? I remember getting paid weekly. I remember getting paid weekly in a brown envelope with actual money in it. Right. Let's have a quick look at what is going on. Let me just adjust my browser because everything moved around on my machine yesterday, which is really annoying. So I just have to reposition stuff. There we go. Right. So financial juice. Let's start with that and have a look at what's happened overnight. Libya's Sahara oil field is to be halted due to protests. Oil didn't like that. Well, actually, oil did like that. Now it doesn't like it again. So forget that. Two more quarter point rate hikes. Okay, so that's what's going to be helping the US dollar this morning. We've got two. Most likely, it's bullish sentiment, obviously, most likely, which is kind of what we've been expecting. Another two rate hikes. We haven't actually had a 25 basis points mentioned properly, I don't think. So basically just trying to bolster this drop on the US, I think. Fed will, yeah, it's all very bullish. So bullish sentiment out of the Fed overnight. Bank of Canada. That's it. So nothing else there on the news. Today is University of Michigan at 3 o'clock. So we've got no news all day, apart from UOM. And UOM is very, very, very hit and miss. Sometimes we do get big rallies off of it. They use it to just dump a load of orders, but it's not particularly impactful. So we've got the G20 starting all day. That shouldn't really do anything. So main thing is obviously University of Michigan, 3 o'clock. So this morning it's all clear, no news. There is a holiday in France today. So I'm not quite sure what impact that's going to have on the DAX. Obviously the DAX is open, but we might find there's a little less liquidity this morning. So we'll watch it and see what happens. I will trade it. And we'll just, we'll see what happens with it. But so looking at the DAX for guidance as to where we might go, this level here is the high. This previous high here, basically. We double topped it. And we're up there again now. So today we could run for that high to test it. And then we will get some limit triggers. I'm pretty sure you'll get some limit triggers off of that. And it's well within ADR, as you can see. So, ADR is all the way up there, miles away. That's another high as well. So we've got multiple highs we're approaching now. We've got this one here, which is obviously the most recent. We've got this old monthly high, which we reacted at. So that's the limit order trigger bounce there. then we've got last month's high. So within 150 ADR today, we've got a lot of big levels to the upside. However, we are bearish on the index overall. So if we're going to put in a lower high, this is where we've got to do it from today. So quick pop up into that gap. We do pop up into that gap, might want to protect any orders that get there, because if they are going to dump it, that's all they're going to do before they drop. So we'll see where we go. We've got 2.5 minutes to the open. So far today, there's no ADRs. Obviously, we've had a massive week, massive week of movement this week. So weekly ranges are all over the place. US dollar Swiss, 225 of its weekly range. US dollar yen, 200 of its weekly range. Multiple pairs on the US dollar, 200. Yeah. So US dollar and Canadian dollar absolutely slammed this week. But with every massive push like this has to come an equally massive profit take. So positions are all on, ready. Hopefully we'll get some rallies on it. We're about to hit ADR on the US dollar yen already this morning before the market's even opened. Excuse me, we're just starting to put reversal alerts in on these US dollars. So this candle is going to be a reverse alert on multiple US dollar pairs. So it's up to London, basically. We'll see what they do. But if London decides to get out of these positions, we could have a nice big ADR reversal today. You can see where my targets are. There are propulsion gaps galore across every US dollar pair. So there's, it's not as if you can't spot a target a mile off on this thing or any of these. Yeah, there's pretty obvious where it's going, as long as it gets there. So everything is starting to move this morning, which is great. So, any drawdown that you're in, you'll find will just vanish. Just got to get the moves underway and hopefully continue them in. The main problem is you get something started in Asia, you get something continue in London, and then New York decides, nah. Then you get stuck and then you have to stay with it. What we'd like is all 3 sessions just to go, do it. That's an ideal world. We don't live there. But anyway. Right, so DAX, we got 30 seconds to the open. All the US indices coming down as you would expect on the US dollar push. So all going the right way. Peter, Uber Drive, I can actually cash out daily. But they do weekly automatically. Did not know that. Don't know anybody that does Uber driving. Uber? Morning, Jerry. Morning, Andres. Morning, Baggy. Morning, Blue Trader. Cloudy in Pontevedra, is it? It's going to be torrential rain and gales here in the UK. Down the south where I live, anyway. Okay, market's open. Morning, Michael. So big pre-market range today. So not taking that. It's a big one. So I'm going to wait for the 5-minute opening range. So the pre-market on the DAX today, probably better to look on the ORB EA, is there. That's your 15-minute pre-market range. So it has triggered, might have triggered short. Depends what your offset is. That wouldn't have triggered me, but so you may have been triggered short on it. That's the one I'd be worried about today. If we do break to the upside, I think we might find some resistance up there. I'm not even sure we're going to get this done, to be honest. I think we might just go today, but we'll see. See what they do. Offset 15, not triggered, ladder. No, yeah. Didn't quite get there. That's the whole purpose of the offset. For those that don't know, with the opening range breakout EA, the reason that offset is there is because we will often test at the open. It will test previous levels, and you'll find a lot of orders placed pre-market ready to go, and that's why we get these double tops and double bottoms at the open, because there's orders in place. The market will say, right, at the open we want to go long. They will place like barriers of orders so that when we hit those levels we bounce off them and shoot off again. And that's basically what the limit orders are, and that's why that offset is there, because if you're going to hit it, you're going to just tip over the edge of it as the orders get eaten up. You don't want to get triggered short on a bounce. So you just put your order there. If it's going to break, it's going to break, and it's going to break hard usually. So you just set yourself a little bit further away to make sure that you don't get hit on these. And double bottoms. If you get hit on a double top, you got the bid and the ask. The ask spread. If the ask spread is 1 and your offset is 1.5, you don't get triggered on a double top. Just kind of housekeeping that you will observe it happening all the time. So we're still inside bar, 2.5 minutes in. No movement yet. The opening range is pretty okay. But I'm not sure I'm going to get on that this morning. So the reason this version of the EA didn't take that was because the high-low distance is too close. So we closed too close to the low, basically, the range. Danger there is you just get taken in on the spread before it goes the other way. So we don't get in. Well, I'm not getting in. If the close of the pre-market range is too close to the low of the pre-market range. Again, sometimes it works, sometimes it doesn't. If this had flown out the lows today, I'd be cross. Can't win all of them. All right, we're not going anywhere at the minute. I don't know how much volume there's going through today. Yeah, volume's normal. That's only broker volume anyway, but I mean, it is still a lot of volume. So, okay, so there's your 5-minute opening range going in. So it's pretty much an inside bar on the 15-minute pre-market move. So 5-minute opening range break today, absolutely perfect to take because it's not gone anywhere at the open. So we're waiting for that initial flurry to come in. At the minute, we are just inside bar. Swiss yen, first ADR of the day. Oh, wow. The Swiss franc rallying again, is it? No, this is weakness in the yen. Very weak yen this morning. That's really going to help that US dollar yen rally today. Okay, there's your 5-minute opening range in. So 5-minute opening range, roughly the same as the pre-market. So going to take a break of that. Just realised I got the offset wrong on that. Change that later. So we're talking about offsets. I've got it set up wrong. Should be a little bit further away. See what I mean with the spread? Yeah. So the spread is roughly that. We double top this candle now. I'm going to get triggered into that order on the spread. So if it just double tops and pulls back, I will be in long. So what you want to have is your order slightly wider than the spread. So my broker has a fixed spread pretty much of 1. So you can see basically there. So there was my order. That was my entry. My entry was basically slipped by the spread. So long on the first break. See if we can get a rally off of that. Straight back inside the range. About to get an ADR on US dollar yen. Very close. So target for me on the yen is this propulsion gap here, which is this low, which is around just over a 38 retracement. The 50 retracement's obviously up here somewhere, that target there. So we can get that rally today. We're going to need 225 ADR off the US dollar today. that yen has got to collapse all day, and the US dollar has got to rally all day. It's not going to get to 225 today. You're very surprised, but that's a big drop. So the University of Michigan comes out positive. You never know. We might get it. Morning, Evans. There's no volume this morning. I think we'll leave that and wait. We're not going anywhere at the moment. No volume. We'll give it 15 minutes and just see where we are after the first 3 candles. But it doesn't seem like it wants to go anywhere today. Not even for the gap fill up. Right, let's have a look at where we are. So ADRs, Swiss yen, we've just looked at. So big rally on that one. Obviously, this Swiss franc, specifically the Swiss yen, we looked at this one yesterday. This is kind of the shallowest pullback out of all of these yens. So what we had was a very strong Swiss franc as the yen was powering up, which has obviously restricted the amount of downside this has been able to do. We've just done the 23 retracement. We didn't get to the 38, which is this propulsion gap here. So not quite there. I was anticipating a second leg on that. I'm anticipating really a second leg on the yen. But at the moment, it doesn't seem to want to do that today. But obviously the US dollar rallying hard is going to take the money away from the yen. So this could well double top, and we might move into a sort of a range on this. So it is potentially a good looking short opportunity up there. M5, wait for the reversal alert off of 100 ADR. But that's the only one you've got so far today. If you look at all the other yen pairs, they all come down hard. We've had very nice retracements on all these. So they've all done 38, 50s, 61, 8 in this instance with the Aussie dollar. So, you know, they've all kind of undone and paid out on everything that we were expecting to happen on them. You know, CAD all the way back down to kind of the origin there. Swiss yen is the one that's stuck. So euro yen, good 50% retracement. So I'm flipped long on these at the moment, some of these basically, because we've got RSI extensions to the downside. That one I'm already out. Look, been in and out on that already. So it's very hard to tell which way this yen is going to go. We were expecting a big, strong move from the yen. We got it. It's over. So the question now is, are we going to pull back and continue, or is this a pullback on a continuation rally? Don't know. So as we know, everything yen at the moment is bullish. Yeah. So the yen is very weak. We are rallying against it all the time. So this Swiss yen could well be the front runner in a continuation straight to the upside. So we will see. So that's the only one you've got on ADR today. There's no other ADRs. There's tons and tons and tons of weeklies. You will be in all of these weeklies probably, or some of them at least, just by default, the fact that they've had ADR hits all week. We've had RSI extensions all week. So they're extended. We know that. We can see we've had a massive, massive week this week. Lots of news, lots of movement. So RSIs, we had lots of hourly RSI extensions yesterday as well. Most of those have played out. So I think probably the best thing to do is just to whiz through every pair this morning, have a look at everything, see where we are with everything and where we think everything's potentially going to be going from where we are now. And then everything's covered, isn't it? Oil has managed to break out. So we don't seem to be stopping either. It is pulling back at the moment. So this high, let's just draw this one on. Yeah, so we got that high there, which is where we basically gapped. Remember, we played that short, back down to that gap fill. We filled the gap, retested, basically, and then we dropped down, and that's where we sort of tested that bottom of the range again, where we took that long back up there. So at the minute, that's your target, 150 ADR, which is this area here. Failing that, it's going to be testing this high. So the question is, are we going to pull back and rally to that level, or are we just going to rally to that level from there and then do a nice pullback before running up to that high up there? So it's a very difficult spot because we are so extended up here. It's very, very hard to take a long when you're this extended, but there is potential for this to go up to 150 ADR. No catalysts on it at the moment. There's no reason we should get any strong movement today. We've had the oil news on Wednesday this week. Next one obviously is next Wednesday. Everything seems to be working well now for this. It's bullish, so continuations, but I would be much more interested in taking a continuation somewhere around that level. So pulling back into here, 150, 175 ADR down, and then trying to rally up to this level and up to that high. So, but it could just go straight up today. So we'll see what happens, but I don't think that's really set up at the minute. We have 4-hour RSI extension, and we're out of the range highs. So we were looking at the range highs as our resistances, flowing through them. We have bounced at them, but this one here is where we're bouncing now, but we are just screaming up on oil. So that $95 target, if it carries on like this, are actually going to make it. We'll see. Right, see what DAX is up to. It's pulling back at the minute. Harold, how is the ORB ADR variation doing? Any advantage? No, not really. It's the same thing. It's exactly the same thing. You can replicate this exactly the same with the existing opening range breakout EA. Just extend the stop distances. That's all I'm doing. I'm just testing quarter ADR. There's no long-term advantage. It's pretty much the same thing. A breakout is a breakout. Yeah. The only difference in all the testing I've done on the opening range breakout strategy, the difference is where your stop is as to whether you get stopped out. That's it. That is the main thing, that the main system parameter permutation that either vastly increased or decreased profitability of the strategy long term. It's how far away you put your stop. If it's going to go, it's going to go. So if you got your stop there, there, or there, and it goes, you're going to make money. It doesn't matter. If this thing now flies today, i.e. we get the opening range breakout and the trend, it doesn't matter where you put your stop, really. If it goes, it goes. You're going to make money. The difference is if you go into a rotation, tight stops lose more money. That's it. Long term, there's very little in it. So if you want to replicate what I'm doing at the moment, go into the existing opening range breakout EA, instead of putting 110, put 150. It's just going to use a wider stop. So I'm just building into my version of this new thing. I said yesterday, I shouldn't call it the ORB ADR EA. It's nothing to do with the opening range breakout EA. It's an EA to trade indices. It's going to be trading inside bar breakouts. It's going to be trading time-based reversals. It's basically designed to make money in the ways that we know we can make money in stock indexes. It's based, the reason I've called it ORB ADR is because the very first trade it takes is based on the opening range. But after that opening range, if it hasn't made money, it will start looking for inside bar breakout. It will start looking for time-based reversals. It's going to do lots of stuff. But at the end of the day, its job is take a trade. Have you made a profit? Yes, stop. If you haven't, let's look at how we can basically try and get our loss back. Try that. Did that work? No. Okay, well, if those two don't work, we know the best thing to do is now wait to this. So try this trade. Did this one work today? No. Well, screw it. No one could make any money today. Same as yesterday. Look at the Dow yesterday at the open. Yeah. No one on the planet makes money there. Yeah. Doesn't matter what strategy you use. you don't make money. Some days you just can't make money. But we know those days are rare. These happen maybe once a week, probably less than once a week. We get days like this. So it's just a case of minimizing loss, basically. Evil. So those strong moves on the yen are enough for BOJ. Basically, what they are saying, we don't care if you destroy our currency as long as you don't do it too fast. Yeah, basically. I mean, it's a mix of everything, isn't it? But if you look at whatever currency you have, right? So I'm in the UK, I have the pound, right? If the pound continues to go, I mean, it's not, but I'm unhappy here with this. Yeah. And our government was unhappy with this. The Bank of England was unhappy with this. No one's happy that you are getting poorer and poorer and poorer and poorer. Yeah. We trade with the US. If our money is buying less stuff, you are unhappy. So your banks and your government's purpose will be to stop that happening. This is why currencies do this all the time. This is a daily chart going back to 2016. Yeah. This is an area where it's convenient to trade with the US. It's not convenient to trade with the US down here. Let's get it back up. The yen is no different to any other country on the planet. They sell a hell of a lot of crap to the US, right? If the US dollar is way more expensive or way stronger, more valuable currency than the yen is, it makes it very hard to sell stuff to the US dollar because your cost of manufacturing in Japan, right, is the same. If the US dollar suddenly gets stronger and stronger and stronger, which means that when they buy stuff, everything you're giving them, you have to give them for a less price in yen, it becomes hard to trade. So you have to do something about it. Bring that conversion rate back down to where it was convenient to trade. This is what intervention is, basically. This is why they intervene, because you either go bankrupt or you do something about it. And that's what interventions are. But also, it's not convenient for the US to be all the way up there because they also sell stuff to Japan. Yeah. So there's a two-way street. This is why it's an exchange rate, and there's no such thing as it's too expensive or it's too cheap or, it's not got a value. It's an exchange rate between two things. On a stock market, when a stock price hits here, this is why they call it overbought, because the stock price is overvalued to the company's turnover or undervalued to the company's turnover, making it a good buy. If something's gone up like this, it just means these two are finding it very difficult to trade with each other. Therefore, they will probably want to do something about it. And that's when the Japanese will go, oi, stop it, bang. In this case, Japanese were not involved. So what's happening is the market is just correcting itself back down to levels where it's convenient to trade. We're in a period now we've never been in our history in the human race. We've never come out of a pandemic straight into a war with the banks having spent so much money and given so much money away and the economy being so screwed and interest rates rising at the rates they are and inflation's never gone up so fast. So we've got 5 major things at the moment the banks and institutions are looking at going, well, I don't know what to do. No one does. So it's impossible to say, are we going to correct all the way back to pre-pandemic levels? Is the world going to be the same as it was pre-pandemic levels? No idea. Yeah. Look at the stock market. Look at the S&P 500. Yeah. COVID. Lockdown. Companies making losses. Stock market going up? Doesn't make sense. Correction. Yeah. What we're seeing is a correction. What's going to happen next? No idea. You can't tell. So this isn't an intervention. If it was an intervention, you'd know about it. Yeah. If it was an intervention, it would stick out like a sore thumb. Yeah. 500 ADR in one day. 500 ADR in one day. Collapse. This is just market correction at the moment. So there is every chance that we could rally back up to this 150 level. That's where the Bank of Japan said, if you push it above there, we will hurt you. They did. They hurt them. They killed them. They made an absolute fortune doing this. So, you know, I don't know what's going to happen with the yen. No one does. But we know historical levels, 145, intervention, 150, intervention. 145, market crapped itself and ran away. I don't know whether they're going to have a run at it again. They're like kids in a playground, like poking with a stick. At some point, that kid's going to grab that stick, snap it in half, and stab you back. I don't know what they're going to do. Not that I ever hammed at school, but anyway, don't know. But at the moment, we know the entire market is hugely long on the yen. Yeah. So if they want to take profit on this move, they have got to sell a load of that yen, which means that this is going to rise. So we know that the market is incredibly short on the US dollar, meaning that if they want to make profit on those moves now, today, or next week, they will need to buy the US dollar. So we've got the actual absolute perfect storm here, haven't we? US dollar has been dropping, yen has been rallying. The opposite is going to happen when that profit take moves. And if both of those profit take moves on the yen and the US happen at the same time, this thing's just going to do a V-shaped recovery. And we're going to be back up at 145 and the Japanese will be going, wait, we'll be back to square one. But who knows? If only we could tell. Broken out short on the DAX. So hedged on the DAX. Let's see where we go. So a collapse on the DAX today. This is kind of what I would expect today, to be honest. The way this US dollar is going and the indices in the US, obviously, that's the NASDAQ, starting to take a tumble. I would expect to see a drop in the DAX today. So let's see if we can get a rundown. Downside targets, obviously, that low there is an obvious turning point. That's all clear air. So this is going to be your proper target today for potential support, I think. Failing that, we'll be looking at yesterday's low, which is pretty much the open yesterday. So we'll see where we go. But at the moment, there doesn't seem to be a lot of volume, does there? We will see. Is it possible to set the stop loss to the opposite pending order with offset? Well, yeah, that's what I use, basically 110%. So if you're offsetting the opening range and you use 100%, your stop will be inside the opening range. So if you set it to 110%, it should just be outside the opening range. That's why it's 110, not 100. I mean, there's no setting to do that, but that's how you would do it. And if it doesn't work that way, set it to 115, maybe 120. Play with it. Strategy tester. That's what it's for. Stick it in the strategy tester, put it in visual mode, test it. You'll be able to see what it does, and you can adjust it to how you need it then. How do you feel the effect of the inflation in your daily life? Starting to feel the pinch. Everybody is. But not too bad. But that's because I don't have a fixed income. You've got a fixed income. I know people that are on fixed incomes who are putting stuff on credit cards at the moment. And I know people whose mortgages are coming up for renewal in the next few months as well, and are facing a 25 to 50% hike on their mortgages because they've come out with fixed rate mortgages at 1.something%, and now they're running into fixed rate mortgages at 6 to 7% plus. Plus the fact that their food shopping's gone up by 15-20%, plus the fact that their energy bills are 3 times higher than they were. Yeah, everybody's feeling it. But if you're not on a fixed income, it's less important, is it? Because you have more disposable income per month than you spend. So I'm lucky that I earn enough money to put money into savings. So I've always got a buffer there. If stuff gets more expensive and I can't cover it that month, there's always money available. But everybody's feeling it at the minute. And it's only going to get worse, especially in the UK. We've got another 1 to 1.25% going on our interest rates. So our mortgages are going to go up by approximately another 2%. So, you know, on £100,000 mortgage, I can't remember what the actual figure was, but I think it was something in the region of about £200 per £100,000 mortgage. So if you've got a 500k mortgage or something like that, you're looking at 1,000, 1,500 in some cases extra per month you got to find. Yeah, if you're on a fixed salary of £2,500 a month and your mortgage goes up by 1,000, you can't pay it. This is why we've got strike. Every service in the UK is striking. The doctors are striking. The nurses are striking. The teachers are striking. The bin men are striking. The rail people are striking. Everybody's striking because they're basically saying, if we don't strike, you're not going to know that we cannot work anymore. So basically, if you do not pay me more, I will leave my job and you will not have doctors anymore. Fair enough. Yeah. It's just the way that, you know, it is. If you've got a fixed salary and everything goes up twice as much as your fixed salary, you can't pay it. So what do you have to do? Put it on a credit card, which then does what? Creates a spiral that you can't get out of. And this is what the governments around the world are trying to get on top of, inflation. That's what causes it, which is why it's so important that we get these inflation figures back under control. 2% inflation is healthy growth, healthy economy, healthy everything. Everybody's slightly getting more money. Everybody's stuff is slightly going up. Businesses are making slightly more money. It's that lovely equity curve we all want to see. This, when it goes like that, there's equilibrium broken because one of the things falls, then that falls, then that falls. At the moment, we're at this stage where everything is completely out of whack with what everybody in the world is earning, and it's all going wrong. So this is why we're seeing this going up at the rate it's going up to the levels it's going up at, because if that doesn't come down, we implode. If people basically cannot find jobs which pay them enough money to pay for the bills, what do? It's just basically everyone goes, right, well, I'm going to have to go and rob the guy next door because he's got the stuff I need, which is money. And the world breaks down and everybody goes into zombie world. Little bit of an over-exaggeration, but you get the point. That's why we've got interest rates doing what they're doing now, because, and this is why we're finding it so difficult to forecast anything in the financial markets, because the entire markets typically are driven by interest rates. And at the moment, the market is guessing, if you like, what we're going to do next with interest rates. And they're putting millions and millions and millions of dollars into forecasts which are coming out different to what they were expecting them to be, which is why we're seeing these vast swings. The Aussie New Zealand is a perfect example of that playing out here. The market was totally wrong on what they thought they were going to do with the New Zealand rate. They had to correct themselves. Just so happened to hit the next rate for the Australian dollar, which they got wrong, and they had to pile in 2 more. So you get this happen because the markets couldn't get it right. And the markets do get it wrong all the time. Yeah. Everything you do in the market, this is why they have scorecards. This is why we have a scorecarding system. Everything the markets do is based on historical information, what happened last time. This is all new. This COVID war thing that we're in now is all new. And as much as you can scorecard and guesstimate, the central banks and governments are having to be very reactive and dynamic, more than they have been in the past, which means that they're making snap decisions based on data that is just not what they're expecting. And the markets are just all over the place, which is why we've got the volatility we've got there. Yeah, this is why the ADRs are where they are, tight and constricted in a lot of Forex pairs and then going crazy and then coming back again. And this is why we've got the huge volatility we've got in the stock market, because nobody knows whether they should have it in the stock market or out the stock markets. The stock market is very fluid at the moment because the money is flowing in and out all the time because every 5 minutes, the view is changing on whether you should or shouldn't be doing this or that. It's just chaotic, which is great for traders because we need volatility to make money. If stuff doesn't go up and down fast, we can't make that money. The downside for position trading and for trading in general is, where you normally see things, normal systems and strategies that you will find in trading everywhere, whether they use a stop loss or not, are all getting caught out at the moment. There's people like Trader Tom, very successful scalping trader, made 2 million quid last year, losing hundreds of thousands a month because this thing isn't doing what it normally does. So you just have to get through it, basically. Just one of those things at the minute. The situation's just not the norm at all. But it will get back to normal life at some point, but I can't see it for the next year or so. Maybe 2 years. I mean, 2026, maybe we'll be back to norms. We don't know what's happening with the stock market. This thing isn't giving us clues. It keeps telling us, we're back to normal. It looks like we're getting back to normal. Oh no, we're not. It looks like we're getting. Oh no, we're not. This is normal. All calm, normal. The odd little bear, then all calm for years. A year and a half, then a little correction. Year and a half, and maybe a quarter correction. Year and a half. That's what happens. Look at this nutty thing at the minute. We haven't got a clue. Looks like it's getting back to normal, but one slight thing could tip that all the way over the edge again. But I think the US dollar's done, which means that we probably will be getting back to a bull calm market, back to normal, which means, unfortunately, it's a climb for the US dollar. Well, not unfortunate. Good for all the other currencies. What is the zero divide in opening range error in MT4? No idea. Google it. Zero divide is just a calculation. It can't do the calculation for some reason. Probably something to do with the way you're using it. Make sure you stick it on the chart half an hour or at least before the open and don't touch it. In EA, it's designed to be stuck on a chart and not touched. So if you're tweaking things, it might be blowing it up. Or your broker can't place the lot size, or you've got bad execution, so that when the EA triggers and does a calculation, by the time it's got to do the calculation, your broker's spreads miles out. There's a million things it could be. Zero divide is one of those errors in MT4 that every programmer knows about because it's just like something's wrong. Thanks, mate. Any clues? No, it's just a zero divide. It's useless. It's a useless error. I don't get it. Morning, Steve. You say you are lucky, but you've made your own luck. That is true. I'm a web developer like you used to be, and took the decision to change. Yeah, I did take the decision to change. The reason I took the decision to change was because I saw companies like One-on-One, which are now called Ionos, and Shopify, and people coming along, right? So I used to build e-commerce stores and corporate websites, and I would charge anything from 2K to 15, 20K per website, depending on the complexity of the site, how long the project would take. Some would take 2-3 weeks, others would take months, and obviously the cost was relative. What these guys at One-on-One did, and Shopify and that, they came along and went, hang on a minute, here's 100 pre-built websites. Pick one, change the color, drop your logo in, you can have it for £19.99. I'm like, well, hang on a minute, I'd charge $2,000 for this. Yeah, but we'll charge £19.99. Because all people want is a website to put their products on. So what happened was pretty much within 6 months, my turnover went from, or rather my inquiries went from up here to down here, because you could buy my product that I used to charge 2,000 for 20 quid. That's why I got out of web. Hosting. We used to set up servers for customers. They used to have their own dedicated servers, their own virtual personal servers. companies like Ionos, again, came along and went, I know, let's build a bank of machines and call it cloud hosting and charge nothing for it. So what I used to charge, again, 300 to 500 pound a year for, they started doing for 10 quid a year. It was crap, but at the end of the day, a customer setting up a website for $19.99 and then $9.99 a year for hosting, right? Your startup costs for your business are now 30 quid instead of 4,000. So that enabled all these small businesses to suddenly go boom and access the internet. The industry changed literally within 12 months. And in my town where I am, there used to be 15, 20 web design companies. Changed. So I got out. You have to adapt. Same as this thing. Yeah. This thing is not static. This thing is dynamic. This thing changes all the time. And if you don't change with it, you get trampled on. It's just the way it is. And obviously overseas, you know, the internet killed a lot of web industries as well, because there's people in Indonesia that will program for $3 an hour. You know what my rate was? £65 an hour is what we used to charge for programming. They'll do it for $5. You can't compete with that. And they're not stupid. They're good, intelligent people. India are producing more programmers per capita than any other country in the world. And they are qualified degree graduates in programming. Why on earth would you pay someone in the UK £65 when you can pay someone in India £5 to do the same job twice as fast and efficiently? World's changed. Adapt and survive. Or die. Reported in the press last week, train drivers earn more than surgeons in the UK. They do. Train drivers earn something like 60,000 or something in it. If I'd have known that, I'd have been a train driver. God, 60 grand to sit in the front of a train going. Get off. Open the doors. I know it's not that simple. Obviously, you don't pay someone 60 grand, whatever it is a year, for just sitting in front of a train operating a hand. But there is only one control in a train, isn't there? That little handle thing. Anyway. But yeah, they get paid a lot of money. More than a pilot. My son's looking at becoming an airline pilot. And it costs about 200, 250 grand to become a pilot. Same as it does to become a doctor. You have to spend 50, 100 grand in education to do it. But pilots, junior pilots, are only paid sort of 40 grand, something like that. So if you become a train driver, you earn more than a commercial airline pilot. But this is why everybody's striking and everybody's cross. 75 grand, is it? Something like that. Yeah, I know it's a lot of money, isn't it? But captains on planes earn six figures. So senior pilots earn, it's the same as everything, isn't it? You got junior doctors, you got consultants and all that sort of thing. You got entry pilots, you got first officers, and and the money goes up with the grade you are, doesn't it? But anyway, we're not talking about trading, are we? We're talking about the world. Much more exciting. Right. So we're out the lows on the DAX. So it's a short today. Shame we got triggered on that long, but the long will be stopped out down there, and when we get down to there, as long as we move on a little bit more than that, we'll be at least at a break-even situation today, but very tricky open today. Blues were there, wicks to the upside. We'll see where we go. Right, so let's whiz through all these currency pairs. No more ADRs yet. RSI is obviously like a Christmas tree on the 4 hour, so we'll just whiz through them all. Aussie dollar CAD, go on the hourly charts. So Aussie dollar CAD, I've got shorts on at the moment. RSI extension to the upside. So that's the recent high, straight into it, double top, limit order triggers. So again, you know, when I keep talking about limit order triggers, there will be levels that you will see where they will be sell orders. So this is where they started selling last time. It's pushed back up there. If they don't want it to hit that high, they will sell it again. So the limit orders will be set in place, trigger and drive short. So big extension. If it's a profit take, pushing up to that level. If it's not, will just continue down. So shorts on at the moment, 2 positions. Target is going to be back down above this propulsion gap and above that resistance or previous resistance, which will be potentially support. So looking to push down there. Aussie dollar Swiss, not really gone anywhere this week. Aussie dollar Swiss, we're mid on the RSIs. So this is looking much more like a support bounce. So we did double bottom. We've got the reversal alert on the hourly now, but it's a bit of a mess down here. So there is a danger that this could just be a pullback, drop, accumulation, break to the downside. Aussie dollar, I suspect, is going to be weak moving forward. But the Swiss franc, obviously, there's a lot of talk in the Telegram group yesterday about what's going on with the Swiss. The Swiss is a safe haven currency, so they use it as a holding currency. So when there's times of trouble, uncertainty, you get money pulled out of other currencies and put into the Swiss franc, because the Swiss franc is incredibly stable. The vast majority of its money comes from the banking system, and everybody puts the money into the banking system when there's any kind of trouble, so it's safe. So you get these big swings in the Swiss franc. It powers up and then it completely dies. So as people push money into it, pull money out of it. So it's the reason it swings so hard is because everything that gets put into it gets pulled out of it. When you're in something that's trending, for example, you've got a currency being pushed and a profit take. Then they add, push, profit take, add, push, profit take, add. That makes a trend. With the Swiss franc, you push it in there and you put it all out. You put it all in, you put it all out. Yeah. So that's why it swings so hard. And it's the differential between the other currency, the base currency or the cross currency, that makes it move up or down further. So I can understand why people don't want to trade the Swiss, because it is volatile and it will move fast and hard for periods of time, because when there's a news shift and you don't know what to do, you stick it in the Swissy. So at the moment, this could go either way. The Aussie is probably going to be weak moving forward. So any hits to the upside back into that propulsion gap would be a good looking short. We've got these levels up here. It could just stay in this range. Don't know. But be more bearish than bullish on it, because we are expecting euro strength, and euro strength will take the Swiss franc with it as well. So, however, we're not seeing that in the euro at the minute. So tricky one. Just leave it for the minute. There's no signals. Last trade I had on it was here, as you can see. Haven't traded it since then. No signals. So not in it. Aussie dollar yen. So got a sell on this at the moment. It's going to need a bit of yen strength. This is probably going to go into drawdown, I suspect. I'm not sure what's going to happen with this yen, but I'm not looking for a lot on it. Looking for just a push down within ADR to get out. There's targets to the upside and downside on this. So it could go either way from where we are now, kind of equidistant to the propulsion zone. So difficult to tell, but it is currently trending down. So it's extended on the RSI to the upside. That was the last entry long there. So in there, out there, in there, out there. Market structure is going to do that. As long as it's getting extended, we'll be in and out. So tricky one, that one. Aussie New Zealand, not going anywhere at the moment. Quite happy not to be in this. This is probably one of the most painful squeezes I've had in the last couple of years, this, because it just happens so fast. This is, you know, we were talking about earlier with the Japanese. This is what the Japanese feel like. Yeah. You know, you're seeing everything you do devalue. We're seeing everything we do go into drawdown so fast. And it's not like it's happening quick. That's the problem. Yeah, you can adjust as things move slowly. If things go like that, you don't have time to think, or it's just panic, isn't it? So that's why there was so much aggressive drawdown control loss in there, because it was, what the hell is going on? What do you mean we're not going to bounce at this level? We did. But, you know, it's just crazy. So happy to be out of this at the minute. It's not got any directional bias. So we've had the New Zealand dollar rates, the Australian and the New Zealand rates indifferent now. So I suspect probably downside, but it's not going anywhere. You can kind of take this in either direction at the moment. Most things you can. So just waiting. Aussie US got shorts on at the moment. Australian dollar weak, beautiful double top bounce there. So just looking for a pullback into propulsion. We've got these two big propulsion targets here. That one there is an obvious one. I'm being a little cautious at the minute. So that high there, which is this previous level. Yeah, so this area here. I'm just being a little cautious when we get back down into there. So when that propulsion gap is filled, we might get stuck at this level. We may well just slam through it and come back down, which is fine. So you've got three obvious targets here. 1, 2, 3. So there's your double bottom. This is a double top on the monthly. So if we're going to be a shallow pullback, you should be able to do that. Medium pullback there. That's going to need to be a deep pullback if we are going to continue long. Now that is going to require a lot of weakness in the US dollar. And the Aussie dollar has not really got any reason to be strong at the moment. So the only reason this has gone parabolic like this is because US dollar has been weak. It's not to do with the Aussie dollar strength. So this should come down fairly hard. I mean, where my targets are just beyond an ADR. That's pretty conservative. That area there or here, I think, is probably more likely to be the target, this propulsion gap. But you're going to need to hold it for 3, 4, 5 days to get there. And mind you, we don't know what's going to happen with the news, do we? But we'll see. CAD Swiss, got longs on this one at the moment. Again, Swiss franc, absolutely parabolic. Perfect storm. All these Swiss francs and all these US and CAD pairs. Swiss franc's been rallying like a lunatic. CAD and the Swiss have been dropping like a lunatic. Put those two together, you've got double parabolic moves. So yeah, huge moves. Lots of drawdown control done on this one. Waiting for that push back up. My average is miles away. I'm 175 ADR away. There's 5 positions on this. I'm toying with the idea of an aggressive drawdown control position on this one. Waiting to see what happens in London. So far, we haven't had anything. So it's tricky. I'm just waiting to see what we get this morning, and at the moment we're not getting anything. So this is a good contender, I think, where we are now for an aggressive drawdown control position, because we've filled all the downside propulsion gaps. And if we are going to continue to rally on the Canadian dollar, which there is a high probability of, if we get that oil movement continuing to the upside, we should at least get a pullback on this, if not a complete rally. So this is probably a good contender for an aggressive drawdown control position, because if we're going to continue bullish price action on this, this is going to be your higher low. There's no reason to go deeper unless we're going to go for a double bottom. So an aggressive drawdown control position somewhere around here with stops under the low is going to get you out fast and potentially make a decent profit. So I'm watching it, but at the moment, it's not going anything. So I'm just going to wait for the minute. But yeah, longs on that. All these Swissies are squeezing. So CAD Yen, 2 positions on that, long. So again, nice extension on the RSI. We pushed up, got divergence, pulled back down again, pulled back down again. So we've got RSI rising, price dropping, bullish divergence at previous resistance, turned support, which is turned into support again with a double bottom. So it looks good. Push up. So if this is going to be a continuation short, i.e. more yen strength, we go pushing down. Yeah. If it's going to be a continuation long, this is a pullback on a long. Either way, going up. And Swiss yen. So again, Swiss yen, as I said, this is a tricky one. I haven't had an entry on this since we got the squeeze on the yen. So not really interested in it at the moment. It is an ADR reversal today, but no signal, so I'm not getting in. There was a close one yesterday, which would have played out quite nicely, but no, not at the moment. AI might take over pilots and train drivers' jobs in the next 7 to 15 years. AI might take over everything in the next 15 years. Would you really want to be flown by an AI though? I mean, it's, you know, in all the sci-fi films, that's what it does, doesn't it? But, you know, in all the sci-fi films, AI also goes mad and kills everybody. So, no. Is it possible to run the hedge set file with percent lot sizing, but without a stop loss? Yeah, that's what the hedge set file does. It's defaulted to 0.01. Just trying to test it without a stop loss. Well, that's what the hedge set file does. It does use percent lot sizing, and it doesn't use a stop. Lee Elliott, GA. Yep, we're getting to GA. We're going through all the pairs. We'll get there. Euro odd. Double bottom. Reversal alert long. Got a buy on this one here. Yesterday. RSI extension. Double bottom. Off we go. Looking for that propulsion gap as a target to the upside. Euro CAD. This is short at the moment. Based on obviously this Canadian dollar movement. So that was the initial entry there. Again, divergence. We are really, really, really getting squeezed on these Canadians. So hopefully we're going to get some strength coming through on it. We've got a level coming up here, which is this previous high. There, accumulated, retested it. So that's a potential area today. It's well within ADR for getting some kind of pullback into this propulsion before we rally up into all these propulsion gaps. Again, Canadian dollar, it depends what happens with oil. Oil prices are really going to help the CAD rally, which obviously will drop this down. But the euro is also bullish. So again, it's a bull against a bull, which gives you a range. Very, very hard to trade. So at the moment, we're just getting a breakout off the Canadian and the US news. So the main reason this Canadian's dropped is basically the US, because obviously we've had a positive interest rate rise on the Canadian dollar this week, which is bullish. Yeah, they were 4.75. They said they were going to 5. They gave us 5. The market was expecting it. It's good. The trouble is the US dollar has had nothing but negative news and collapsed, which has dragged the Canadian dollar down with it. So this Canadian drop that we've seen is kind of artificial, caused by the US dollar. The Canadian dollar should have its own strength and rally off the back of the interest rates. So I don't really see a problem with this one. Only got 3 positions on it at the moment, so just waiting for a pullback. And it's obviously very extended. So pullback into propulsion is an exit. And then it might well rally on the euro. But as I say, we've got no euro news for 2 weeks yet. So Euro Swiss, got longs on this. I've got an accidental buy double order on this. Which is kind of aggressive drawdown control with 2 positions on. So I'm going to have to get out of one of these, unfortunately, with a loss, which is going to hurt because it's going to be 0.75%. But I've got to get out of one because I cocked up 2 entries. So we'll see what happens with this, but it'd be nice to get a little bit of Swiss franc weakness so we can get out of this one. Obviously, support there out of this accumulation. That's where it broke. That's why you've got the propulsion gaps, because that was the strength needed to get through the support. So that's where we will come and retest, and they will probably add back in. So Euro Swiss looking good for longs. Didn't quite get another position on down here, unfortunately, because it was slightly too close. But another position on there would have given you a nice easy out today within ADR, but I didn't get it on. So we'll see where we go. Euro pound, nothing on that at the moment. Completely flat, completely sideways, range bound. Yeah, no. It's an absolute look at the propulsion gaps on this at the minute. All these grey ones. It's literally just putting in a propulsion gap, coming back 2 days later, filling it. Put a propulsion gap, come back, fill it. Propulsion gap, come back, fill it. Propulsion gap, fill it. Propulsion, fill it. Propulsion. In fact, that one's pretty much done. I would class that as complete. So I'd ignore that one, but there's one there. However, both of these are strong. That's why we're range bound. So it takes a lot to get there, basically. A lot to get this one moving. Nothing on it yet. Euro yen, longs on this at the moment. It is rallying at the moment. So I'm really undecided about the yen now. That's a big drop in the yen, and you have to think, well, are we going to get a second leg on it? I personally think the yen's probably going to be able to rally again, but it takes a lot. If the yen was partly responsible for that, and it wasn't just a profit take on this initial move, and they're going to now hit them again, you've got to ask the question, do you think there is enough strength in there? So I'm undecided on the yens, but any extensions are likely going to get a profit take move. So just going to get in, get out in the next couple of weeks whenever it lets me out. If it lets me out today, fantastic. But same with all those yens. Euro New Zealand, sideways. Trade it any way you like. As soon as you get an RSI extension, in, out, in, out. So very nice pair at the moment, Euro New Zealand. Just wait for RSI and get in. Euro US dollar, shorts. So another entry taken this morning in Asia. On that one, reversal alert's just gone in on the hourly. So we just had the reversal alert there, back down on M5, which was there, which was off of that high. So it's that candle there that gave the reversal alert, which is a bit spready, but we then pushed back up in Asia. You got a second reversal alert and retest, and coming down now. So we're just pulling back at the moment. But yeah, looks good. Again, Canadian and US vastly due a profit take move. So loads of propulsion anywhere in here. So these are lovely propulsion gaps, because that high there is your most recent high before the propulsion move on the news. So if you're looking at support resistance, that's the obvious spot for a bounce, the last high. So market structure, your last high typically becomes your support. That is the last high. You've got that whacking great propulsion gap as confluence, and two further propulsion gaps there. So anywhere down here could act as potential support, but that would be the obvious target. We've also got one down here within the balance area as well. So yeah, like it. But we need some US dollar strength, please. Pound odd. Just got long on that one this morning, or was that yesterday? Yesterday, sorry. So RSI extension yesterday. So looking for a pullback on that. There's the propulsion gap that I'm targeting, which is basically ADR. Pound CAD, big strong push to the upside. Multiple entries on this one. So initial entry was there, looking for that to be a double top sweep. And it basically just rallied from there. So pound been massively strong. Canadian dollar, rubbish. So obviously that one's been rallying. So we'll wait for the profit take move on that. Propulsion gap target, which is that high. Yeah. So you always find, not always, but the vast majority of the time, you will always find a propulsion gap at a previous support resistance, which is why they work so well. Yeah. So there's a previous resistance. There's a propulsion gap. There's a previous resistance. There's a propulsion gap. That one's a V-shaped recovery. There's a previous resistance. There's a propulsion gap. So the propulsion gaps are caused by the market pushing against that resistance until it breaks. And as there's no resistance, that's why we call it resistance. There's no resistance above the level that the people are trying to sell from. You get that pop. Yeah, and then a continuation as everybody flips long because they've just seen a breakout happen. That's why you get these. So that's why they're always at usually support resistance areas, which is why they work so well retesting. So drop basically on that one. A bit orderly, this one. Don't like the price action on this. I don't like it when we see nice market structure like this, because if it's going to continue to trend, it's going to continue to do it. So if it does, we'll have to deal with it. 3 positions on. We've broken out the monthly high now. So this could be a breakout of the monthly high and then a rejection. But we'll wait and see. So it's this monthly high from back here. Yeah, we've broken out that level. So we tested it, broke it. That is potentially on the cards. So we're going to need this US dollar to continue to be weak for that to happen. So, which could happen. So we'll see. But that was the RSI extension initially, and obviously it's been rallying since. Pound Swiss, long at the moment. First entry yesterday. We had the hourly reversal alert yesterday and retest. coming down so far this morning. Is this the Swiss or is this the pound? Swiss. So Swiss franc powering up again. More strength on the Swiss franc. So pound Swiss coming down at the moment on the back of the Swissy. So we'll see how long this Swiss franc rally lasts. But first entry there, targeting at the moment this area here, support resistance. Obviously that propulsion gap, actually might as well push it down into propulsion just in case. It's 125 ADR from where we are now anyway, but down into that propulsion gap. It could also watch that area there, pull back up and find resistance there, but more likely they'll come up into this area, which is where they started that collapse. So yeah, we'll see. But long on that, basically off of that embedded RSI. Pound yen stuck sideways on it at the moment, not really going anywhere. Same with all these yens. We're in the middle of a slight pullback, slight yen weakness, but we'll see. So continuation shorts on that one, I think, but we'll see what happens. Pound New Zealand, lovely double bottoms here. So yeah, long on that, looking for it to come up into propulsion. There's multiple targets to the upside on this. So we've got that propulsion gap. That's the closest. I'm always getting out on the closest. I'm always out too soon though. So doesn't matter how many times I see these propulsion gaps get filled and I know they're going to get filled, I still always go for the closest one because you do get them orphaned. And if they do get orphaned, I just don't want to be stuck. I'd rather just be out with profit. So, but if you want to be brave, 200 ADR, that's a double top, that's a double bottom. We're in a range. Pretty logical. You would get up there. So there is that target there. So up to you on that one. Pound US dollar, we know about. So the US dollar obviously has been squashed. We need some strength in that US dollar to get a profit take move in play. So at the moment, there's multiple targets. So this one here, I would say is done. It's left a new propulsion gap in play, but that isn't really an accumulation break. That is just a big, strong move, part of a V-shaped recovery. So this is part of a V-shaped recovery as well. This is kind of done. So really, this accumulation break here is really the only unfinished business I can see here. And that would be potentially a 38 retracement pullback on that. So be watching that area when we get down there to see what happens. I'm hoping what we do is we just kind of grind down there and we get some kind of news to slam it. So we'll see what happens, but I'm not quite sure we're going to get enough movement off the University of Michigan this afternoon. Just watching what's happening with the DAX. Was not really going anywhere today. So yeah, I mean, at the moment it's a short. It's massively extended up here, and you know it's been embedded a few times. So bit of a squeeze on the US at the minute. New Zealand CAD starting to roll over. Bit Canadian dollar strength. New Zealand's had a nice little pop off of its interest rate. Looking for it to pull back down into that propulsion. I'm targeting these highs here. So potentially might bounce off of that weekly high. So target there. More likely going to come back down into that propulsion. But up to you where you get out. New Zealand dollar Swiss. Nothing on this one at the moment. Sideways. Last entry was back here off of that H1M5. And that's out. Targets to the upside and to the downside now. So it looks like we're coming back down here at the moment. Again, Swiss franc is in the driving seat at the minute. So as long as the Swiss is powering up, everything is going to go the opposite way to the Swissy. When the Swiss franc powers up, it powers up. Nothing stops it. So you just basically have to wait and get out of the way until it's finished. And then the other currency will be able to take over. Trouble is, if you're trading something which is bearish against the Swiss franc, when it becomes bullish, you get that move down. When the Swiss franc stops, the other currency hasn't got the strength to rally back. This is why, you know, we had this conversation in Telegram about it. You know, it's the Swiss franc. A lot of people don't trade it because it is violent. It is like gold. You know, and I should say, I don't trade gold because it has these big mood swings. But the big mood swings are actually just caused by the US dollar, really, most of the time. But the Swiss franc is very similar to that. So when it's on the move, what you really want to be doing is, if you're going to trade Swiss, ideally, I mean, I don't do this either, practice what you preach type thing, but the ideal thing to do would be to just trade Swiss franc pairs that you are expecting to have the other currency go the opposite way. So you want something strong. So the Aussie dollar Swiss at the moment sells. So when the Aussie dollar is getting hammered, pushed up because of Swiss franc weakness, those are probably good ones to take. Yeah. So go with the biases. Anything that's kind of midline, you probably find you haven't got the strength to fight back against the Swiss franc. So I don't really care. New Zealand dollar yen, but if you do care, that's a solution. The other solution I said as well, we'll look at the US dollar Swiss in a minute, I'll tell you. New Zealand dollar yen, entry on that one yesterday is a short. RSI extension to the upside, looking for it to come back down into those propulsions, but it may well push up into there. If it does, we're scaling in, waiting for the drop. New Zealand dollar, US dollar, massive extension again, same thing, US dollar weakness. So all these got into like 2 or 3 positions on the rallies. Propulsion gap targets to the downside. There's my targets there. US dollar CAD extended to the downside. Targets back up in this propulsion gap here. Just that level as well, look, is also a potential sticking point. So if it rallies back up into there and we get a big strong reaction, might want to consider an exit there. US dollar yen, we know about this one, big extension to the downside. Strong yen, weak US, perfect storm, big push. Starting to reverse. We've had the H1 reversal alert this morning. So are we going to retest W pattern and start that move to the upside? We'll find out this morning and this afternoon. And US dollar Swiss, again, massive extension to the downside. US dollar weakness, Swiss franc strength. So the US dollar yen and the US dollar Swissy are the perfect storms. We've had all this weakness in the US. We've had massive negative US news. And at the same time, we've had strong yen and Swiss franc pushes. Double stretched. Double ping back though. So when it pings back, it'll ping back very quick. Just got to wait for it. You've got to wait for the Swissies to take its foot off the gas, basically. So the other thing I was saying about in the Telegram group, the other option you've got, and I covered this the other day as well, with another strategy that I said, you know, people talk about these strategies with incredibly high strike rates. I can also produce those strategies, no problem. I have some. Jared, the transparent trader on YouTube, he has some that are 80+%, but they all work on the daily, and you will be taking 2 or 3 entries a year. Yeah, so there's ways and means of getting much higher strike rates. So when you're looking at things like the Swiss franc, zoom out and have a look at it historically, and you know, look at RSI, look at where we got to there, right? 13. Pull it up a little bit to 15. Yeah. Only take the Swiss franc if it gets below 15 or above 85. So instead of saying, I'm not going to trade the Swiss franc anymore, and this is a very common reaction. Many people have said it in Telegram and in the live room many times. I've said it myself. I'm not trading the Aussie New Zealand again. That was hideous. Trade it, but just make it a little bit harder to get into a trade on it. So if it's something you don't want to trade anymore, don't completely eliminate it from your portfolio. If it's something that is historically a big mood swinger, just extend the RSI extension. So when you're using the market reversal alert CA, instead of using the 25 or the 30 level on the hourly, use the 15. Yeah. Don't get into it unless it's super stretched. So if you were using the 15, you'd have had your first entry there, not there. You saved yourself all that crap. So you're only in 2. Yeah. And look how stretched it is. Look how far it's got to go. So, if you want to be more conservative, and this is the same for drawdown, if you don't like drawdown, there's ways and means to reduce drawdown. Yeah. If you use wider RSI extensions, you will take a lot less trades. There'll be periods where you'll be sitting there going, I haven't got anything on for a week because the market's flat. And then all of a sudden you'll get a trade and then another one will come on. But you'll be in and out of them very fast because you're waiting for those bigger swings. But you'll miss all the ones, all these little beauties. You'll miss that. You'll miss that. You'll miss that. You'll miss that. But equally, you would have missed that. You wouldn't be in this. Yeah. So there's always a plus and always a minus. Yeah. I've got lovely 4 trades there that you didn't have, but I'm now stuck in a little bit of a squeeze with 5 positions on something within pretty much a week, which is not the norm by a long shot, is it? Don't usually get into 5 positions in a week. Market doesn't normally move that far. So, if you've got certain instruments that you just don't like, make it harder for it to give you an opportunity. Don't eliminate it, because when you make it harder to give you an opportunity, like here, can you? Yeah, this one here where we're extended below the 20 level. Yeah, you would have got in there, beauty, but I would have got in here and probably here and here, whereas you would have only got in there. But there'll be many times where you would have missed opportunities that just went like that. Horses for courses. This is what I keep saying in here. Stop looking for the perfect setting. There isn't one. Every strategy, when you fine tune it to make it slightly better, you will make something else worse. And typically what you find is, as you optimize, if you have a strategy that you're developing, what you find is you will get a strategy, you'll have an equity curve which is positive, and you'll go, brilliant, that looks really good. It took 1,750 trades in 2 years. And you go, right, what if I did this to try and improve it? So you run it through the optimizer, and all of a sudden your equity curve gets a little bit steep, and you're like, that looks a lot better. Now we've only taken 850 trades because we've eliminated a load of losing trades, but we've kept all the winning trades. Yeah. And then you'll do something which will make it better. And suddenly you'll find yourself taking 250 trades in a year only, but you're missing tons. So what your equity curve does is it doesn't actually get any better. You don't make any more profit, but you get a slightly higher strike rate with a lot less trades. Conservative, medium, aggressive. This is why you find in a lot of these EAs that people pump out there, they give you a drop down which says, do you want to have the conservative settings or the aggressive settings, or they call it the A+ settings and the B- settings, or whatever it is. All it is an optimization setting to make it harder to take a trade, so you get less trades, but you miss all these lovely ones. So when you get a beautiful run of range-bound activity, you miss it all. But when you get a squeeze, you get squeezed less. That's the difference between the RSI extensions. There isn't a right or a wrong. Sometimes one of them will work beautifully for 3 months, and then you'll get hit and you'll think, I wish I'd have taken the 80 instead of the 20 or something. And I wish I'd have taken the 80 instead of the 70 or the 90. Yeah, that's one of the strategies I said about the other day. Go back and look in time at how often we get down to that 5 level on the RSI. Very rare. When we do, though, you're in, you're out, you're done, and the strike rate's 100%. If you're happy to wait and only take 1 trade a quarter. But, can you live off of it? No. So you've got to find an equilibrium with settings in any EA or strategy that gives you enough trades so that you can get into enough opportunities to make money, i.e. make a living, but also is as safe as it can be for your account. You're never going to find exactly the right setting that is always going to make you a living and never have a downside. Everything's got to have a downside. It's risk. It's a random thing. Yeah. Anybody that has longed this thing for the last week, institutions, us, everybody, didn't do it because they fancied it. They did it because it looked like something was going to happen, which didn't happen, because the market is random and it's got 10 big banks controlling where it goes. 8 of them decided they wanted that to happen. 2 of them didn't. That's why that's happened. But the 8 will have to get out of these positions at some point. That we know, because we see it happen over and over again. When is it going to happen? Don't know. Probably maybe Wednesday next week. We could be down here. Could be this afternoon. Which setting is best? None of them. Look. None of the settings work at the moment, because there's been a massive squeeze in the US dollar. So there's nothing you can do about it. So try not to eliminate stuff, because if you go back in your P&L, right, and look at your last 3 months worth of trading, if you've been position trading for 3 months, 6 months, or anything like that, go back and look at your P&L and look at how much money you've made out of the Swiss franc, right? If you're being squeezed on it now and you've made a loss this month or last month on the Swiss franc, look at the long term. Over the previous 4 months, the Swissy probably made you a very nice income, because the Swissy moves up and down all the time. Every now and again, though, you'll take it against the wrong currency, like the US, and that'll happen. But it's not the Swissy's fault, and there's nothing you can do. So if you stop trading the Swissy, you're just going to look at your P&L and go, that 12.5 grand I made out of the Swiss franc over that 4-month period, I'm just not going to make it for the rest of the year. Why would you not want to make that 12.5 grand? If it's long-term profitable for the quarter, the month, or whatever, stick with it. Nothing's going to work all the time. If it did, we wouldn't have loss and drawdown, would we? So, try not to get too picky with the, and next month it won't be the Swiss franc. It will be the Aussie dollar does it to you. And you go, I'm not trading the Aussie dollar anymore. Then the next month it'll be the yen. And you go, I'm not going to trade the yen anymore. Before you know it, you can't trade the Aussie dollar, the Swiss franc, or the yen, and you're only left with 5 pairs. You can't make money because you haven't got enough opportunities on those. Yeah, so you have to be logical with it. Morning, George. Morning, afternoon, evening, etc. DW, morning. Can we change the set file settings whilst the market reversal alert CA is in a trade? You can do. But just be aware that if you've got drawdown control turned on, it might want to do new drawdown control. And if it's already done it, that is. But yeah, you can do. And it's impossible to tell what will happen, because obviously there's a million combinations of settings. So it depends what settings you change, but there's nothing wrong with changing it. You have experience in trading stocks. Can you recommend where you can buy stocks for long term, like investment without leverage? No, I don't. Never done it. Go to somewhere like investing.com, I guess, and have a look around. If you're going to run your own portfolio, why not use leverage? Or just trade stocks. Interactive Brokers is a good one. That's who I used to trade with, IB. Morning, Shroud. What's your outlook on the pound CAD? Just done that, I think. Anyone having audio problems with Windows 11 when using trading software? Nope. Windows 11? Really? Don't know. Not for me. Well, I don't even know what Windows I'm on, to be honest. What am I on? Windows 11. Windows... Where's the system information gone? Oh, God. I don't even know what Windows I'm on. Oh, yeah, Windows 11 I am. Windows 11 Home. Lose track, just updates automatically. What's your opinion on Top Step? Someone that can get by on $50 to $100 a day. I'm thinking the 25k package and use micros. Yeah, you try Top Step if you want. Top Step. Obviously, it's futures. my opinion on Top Step is they're a great prop firm for futures trading. So is Take Profit Trader. Whether you can make $50 to $100 a day has nothing to do with the prop firm. Are you a good futures trader? The advantage with Top Step is they will cap your downside for you. The other firms will fail your evaluation and you will lose your funded account. Top Step have a principle of if you hit the drawdown limit, they stop you for the day and say, cool off, come back tomorrow. We're not going to take it away, but you're not going to trade anymore today because you've cocked it up. That's the advantage of Top Step. They've all got advantages and disadvantages. The advantage of Take Profit Trader is they will pay you out twice a month, maximum of 4K, but they will pay you out regularly from day one. That's their advantage. They've all got different pluses and minuses. You've just got to go and look at them and see which one's best for you. But you know, it's very easy to say get by on $50 to $100 a day. The difficulty is making $50 to $100 a day. Yesterday on my Top Step, I was down 485, I think. At the end of the New York session yesterday. And I pulled it back to 185 loss. Yeah. But look at my P&L yesterday. Last trade of the day, lovely. Rest of it, utter crap. Just like that, wasn't it? It's choppy, horrible session yesterday. But you know, if you say you want to make, let's say, for example, you want to make $100 a day. Sounds easy if the market goes your way. If the market doesn't go your way, you're going to have many days which are going to be like this, because you will keep trying to make $100 a day until either you hit that max loss limit and they stop you trading for the day. And if you do that 3 days in a row, your account's gone. So even trading micros, which is obviously much lower risk, you're going to be in trouble. Yeah. It's all about limiting the trades and taking less trades with wider stops and higher probability. But even then, the market conditions aren't going to make your system or strategy work every day. So you've got to look at it long term. You need to make X thousand a month. And for me, so if you want to make, say, for example, $100 a day, you're looking to make $2,000 a month. It's better not to trade micros. I think it's better to trade normal contracts and get that money faster, because if you've got a system or strategy that works a lot of the time, you can make a lot of money very quickly. With micros, what you end up finding is that you make very small losses, but when the trades start to go your way, you make virtually no money. Whereas if I get into an opening range breakout, for example, not on the screen, am I? I get into an opening range breakout on the NASDAQ, or the DOW is what I mainly trade. And it goes like that within 15 minutes. That's me done. I've walked away and I've made somewhere in the region of $500 to $1,000. If I can do that 3 times, if you can do that 3 times a month, that's it. If you're trading micros, you're going to need to sit at that computer for hours every day to try and get to $100 in profit. Because when you have these little losers, admittedly for you, if you were trading yesterday, you'd have lost $18.50. The previous day, I made this week $2,000 this week, yeah. But look at how it happened. Huge loss. Win. Yeah. These are the trades, yeah. So it's just so much easier to trade big lots, but trade a system or strategy that you only have to do once or twice. So you go with the ORB, doesn't work out, stop, sit back, wait, where's the next support? Where's the next resistance? Where's the next propulsion gap? Where's the next block of orders? There's a big wick. There's another big wick. Short it. Yeah, just sit there and wait. If you do it with micros, I find with micros, what I end up doing is going sell, 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 sell. And I'll build it up so I've got 6 or 7 micros as it's going my way. Then it will pull back and I'll be crapping myself and get out. If I'd just got in with one contract and it went down to there, I'd be out with a load of money. So there's a lot to be said for micros for practice, but in real trading on futures, I find I've never managed to crack it with micros. It's safer, much safer, but so much harder to make money. But it's really good. Micros are really good for practicing. If you're going to trade on the ladder, for example, or trade with something like Jigsaw, and you want to practice order flow trading, micros are great because it's all about that repetition. But you know, if you get a full-size contract on, you get a big 5-minute candle, and you add a second full-size contract and you get a big 5-minute candle, you put both to break even, you get a big 5-minute candle, you're done. Your mortgage is paid. Seriously, it's that quick. With micros, it doesn't work that way. So if you want to make $50 to $100 a day on micros, I mean, obviously, forget the NASDAQ. Don't go anywhere near the NASDAQ. Actually, no, well, you could do, if you want to use micros, use the NASDAQ, because NASDAQ moves twice as fast. In fact, that would probably be the best thing to do, but it's volatile and crazy and will scare the crap out of you all the time. So better off trading the DOW, I think. But I don't know. It's a difficult one to answer, Tony, really. But top step are good. And take profit trader are really good. US dollar Swiss still dropping, is that? Double bottomed. So watch this level. We're double bottoming at the moment. So let's see if we hold. The liquidity run, if you're a smart money trader, and you'll be going out highs. See where we go. Henrikas, in market structure trading system, if you're in the market and it's not going in your side, need open opposite position. Well, in market structure trading system, if you're in the market and it's not going in your side, you need to open opposite position. Hedging, you're talking about, are you? You can do if you want to. Have you watched the Bootcamp, Henrikas? There's links going along the bottom all the time. One of them is to the Bootcamp on the website. Go and watch the Bootcamp. Literally everything is completely explained in these 5 videos, how I position trade. Everything you need to know, all the strategies as well in day 5. And one of the strategies in day 5 is the hedging strategy, but it's one strategy. Trying to find where it is. So that's the mean reversion strategy. Somewhere in here is a hedging strategy. ADR reversals. Hedging. There you go. I think that's probably what you're referring to. So go and watch that one from about 1 hour 40-ish, something like that. But of all the strategies you see me execute, this is the one I don't use. It is incredibly good and it works very well, but it is massive risk and high drawdown, high reward. It will make you big money, but it will go into big drawdown because you're hedging. Basically, what you're saying is, get me in both directions, right? On everything. Just get me in all the time, regardless of what it does. And as soon as it goes into a trend, deal with the other side and take profit on that one. The profit you take on that one will always be way lower than that stretch. So it will get you into a lot more risk, but it will make a lot of money. So I've had that the hourly version of it running on the VPS for a while, and I think it's made about 15% this month or something ridiculous. But it's been in massive drawdown. I think it's gone into 70% of drawdown or something ridiculous as well. So there you go. This is it. So it's done 8% this month. It's sitting in 25% of drawdown. It spends the hedging strategies spend 90% of their life in about 20 to 30% of drawdown. Because if you think about it, you are always having a wrong position on. You're hedging. So by the definition of the strategy, you are always on the wrong side. Always, because you're both. So if something goes into a range, you are always wrong and right, but always going to be wrong. So when something squeezes, you are always going to be in the squeeze. So if you get 5 things squeezed at the same time, you will be squeezed 5 times. You will take way more drawdown. That's the downside to it. You can limit that, obviously, by limiting the number of pairs you're in, but then you're going to limit your upside because you're going to miss the good swings. So, again, there's no right or wrong. They're all different. And this is why I say to everybody, go and look in the strategy tester, get the market reverse alerts EA, load up the set files, understand what the set files are doing, what the strategies are doing, tweak them to meet you and your criteria. So if you backtest something for 6 months or a year in 5 different currencies, you'll be able to see what the drawdown is. You'll be able to see what profit it makes. You'll be able to see the pluses and the minuses. And everybody's got a different risk tolerance. I'm happy sitting in 15% of drawdown. I'm not happy, obviously. No one's ever happy about sitting in 15% of drawdown. But I'm comfortable there because I've been there thousands of times and I know what happens when you get that deep. It's about to kick off in the opposite direction. Some people think if they get to 5% drawdown, the world's going to explode. I can't control that, and I'm never going to change that. You're human beings. Everybody's got a different tolerance. But if your tolerance is 5%, you need to adjust what you do to sit in your tolerances. So you either need to reduce your risk down dramatically or reduce the number of pairs you take or extend the RSIs out to a much wider level so you're getting into less trades but more comfortably. There's always ways and means to do everything. But at the end of the day, you're trading something random that you can't control. So there's always going to be some downside somewhere. And that's what your account is there for. You're putting all this money into your broker account to use as risk to make money with. It's all there for risk. We just need to try and keep that drawdown part of it as small as we can to make sure that if something goes badly wrong, we've got a way to get out of it. But there's no way of telling that. In the same way as if you have a strategy with a stop loss and you use a stop loss under a low and your strategy has 10 hits on that stop loss in a row, 10 losing trades, it's exactly the same as us going into 15% of drawdown. 10% of drawdown, except you've lost all that money. We have not lost anything. We're just sitting in drawdown waiting for the pullback. So when we go into 10% of drawdown, everybody else that's used a stop loss has gone into 10% of loss on their account. They've now got to get back 10% of their account. We haven't lost anything. We're sitting waiting. That's the difference between banks, position trading strategies, and people that use a stop loss. But it's still a downside. It's still a negative. It's always going to be there. But your negative and my negative are going to be different to someone else's and someone else's. Everybody's going to have a different comfort level. Everybody's going to be in a different stage of doing this as well. So someone that's been doing this for a year is going to have a completely different outlook on this to someone that's been doing it for a month, because someone doing it for a year will probably have sat through 2 or 3 squeezes and they've gone, yeah, last time this happened, it just came back. I now know where I need to do this and why I need to do this. Whereas someone sitting there for a month experiencing their first squeeze will be pulling their hair out, panicking, thinking, oh my God, I'm in 5% of drawdown. Oh, well, wait, chill. US dollar Swiss is collapsing. Yes, it is. It's done it before, lots of times. It collapses sometimes. Ooh. Ooh. Oh my God. Close out of the loss. Might happen. Collapse. What's going to happen next? I've no idea. But 90% of the time, that's what happens next. Because the banks are sitting there on a ton of cash and they've got to take profit on the move. That's why it happens. This is why this is happening. This isn't happening because there's anything. I mean, there is the US dollar's had bad news and stuff. Yes, there is negative downside potentially to the US dollar, but the banks are squeezing the crap out of everybody wanting to buy it for a reason, because they're getting richer and richer and richer in their open P&L. For that profit in their open P&L to be realized, they have to close the positions. When you sell a position, to close it, you buy. So when they suddenly go, let's take profit, guys, there will be a massive buying frenzy by these 8-10 institutions that have made that move happen. When you've been through it 2 or 3 times and you understand what's happening, you just know you're waiting for something to kick off, and it will kick off. University of Michigan this afternoon, regardless of whether it comes out plus or minus, this thing could pop 150 ADR. It won't be popping because of the University of Michigan. It'll be popping because they timed their profit take move on the news to catch people that are trying to put liquidity into the market. Because to be able to move the market, they need liquidity. That's why the market moves on news. And that's why all the news traders go, hang on, that was green. Why did it go down? Because they needed to move it down. Nothing to do with the news. They needed to move it down. You put your orders in there that they needed to execute their orders, and they decided to take those orders away from you. That's why if you put a stop loss in the market, the banks will go and get it, because they know where it is, because everybody puts it in the same place. Because they need liquidity. They need to execute orders. Not you, me, but all banks and institutions have limit orders and stop orders placed there. So, these orders are not get in with 25 grand risk, get out with a 25 grand loss. These are orders placed in the market to get in and out of the market based on their own P&Ls. They're all profitable trades for all the banks. It's just they're positioned in different places, or their strategic places. They need to take orders in a direction. Yeah, it's all a case of, using your risk, your amount of money, your pot of money, to scale in and out of the market on waves. There is no way of predicting the waves. It's not like surfing. You can sit there and you can see a big one coming. You get ready, you start paddling, and as soon as it hits you, you go. With trading, you're sitting there, there's a big wave coming, but it's going to take you by surprise, and it's going to be a tsunami. You just don't know when it's coming. So you just got to be there on your board. When it arrives, you're going to get it. But if you're not there on your board, i.e. you haven't got risk in that position, you're not going to get it. By the time you see it coming, it's too late. That's all we're doing. So pick a strategy, tweak it to your criteria. You don't have, like I say, the position trading methodology works on all mean reversion strategies. You don't need to use my strategy. If you don't want to use the RSI, don't use it. Look at this H4 RSI at the moment on the US dollar Swiss. Right, 5. We're down at 5. Let's put a line down there. 3.72. Never been here. This is new. COVID was new. This is new. We haven't been down here. We haven't had a move this big before. But you look at other moves we've had. There you go. So that's back as far as I got, 2009 December. We've never been here. Yeah. But every time we've been here, like at a higher level, the market has had a reaction. Yeah. There's always some kind of reaction down at these levels. Look at that. Even that didn't drive it down that far. Look what happened after it. What do you think everybody here was thinking? We're all going to die. No, you're not. Just what happens. But that's a proper move. But the reason that is down there is because we were very low when the move started. Look at where that was. Yeah, we were already extended at the 25 level when the parabolic move started. That's why it's got down to that level, because it's happened super fast at a level of already being extended, which is unusual. Look at that. Boing. Yeah. Banks making money, banks making money, banks making money, banks going, holy crap, if we don't get out of this soon, boys, we've got a risk of this $25 billion in profit disappearing. Let's take it. It's going to happen. Just got to wait. Might be today, might be tomorrow, it might be next week. Won't be tomorrow because today's Friday, but it might be next week. Might be this afternoon. It'll get underway at some point. DAX today is just stubborn as you like, not going anywhere, not doing anything. So I'm in a hedge at the minute. See if we get a break. If it breaks today, brilliant. If it doesn't break today, I'll just be banking a loss on it. So now I can do. Here is another stupid question. There's no stupid question, Peter, unless you've asked the question before. Then it's stupid. I know news moving markets and currencies, but technically position trading will work even if we won't pay attention to it. So news, yeah. Yeah. You don't have to pay attention to news, but it's important to understand the, at the moment, it's not as important because everything is screwed, right? So what normally happens is you normally have a currency or a number of currencies which for some fundamental reason are better to be in a direction on than others, which is why we pay attention to what the futures market is doing, because they are positioned for a reason, because that's where they think the market is going to go. Normally, you've got somebody that is having to increase interest rates because their inflation is a little higher or their unemployment is coming down too far, so they'll reduce that to encourage spending and all sorts of things, yeah. But at the moment, because everybody is in the same boat, every country is screwed from an inflation, interest rate, unemployment perspective because of what's happened with COVID and the war and everything. We're all stuffed. Energy prices, yeah. So there's no biases. Last year, we had bias. This year, it's all gone wrong. So regardless of whether there's a bias or not, you can position trade, because as long as the banks are moving in one direction, they will always pull it back. The difference between having something with a fundamental bias is the pullback. So if you are a bank and there is a reason that you want to be buying the US dollar against the Swiss franc, for example, what you will do is you will scale out of less of your positions long and buy more, and then you'll scale out of less. And as long as the fundamentals say that the Swiss franc will continue to drop and the US dollar will continue to rally, you'll keep doing that. When there's less fundamental bias and you've got two currencies which are both massively bullish, you get more of a range-bound activity, because as one pushes hard and stops, the other one that is long pushes hard and stops. Then the other one pushes long and hard. And these usually happen on news. This is why you want to position yourself ahead of news in the direction you think the currency is going to go, which is what the banks and institutions are doing. They're using their scorecards to get ready on news events to buy or sell the currency based on the bias. At the moment, it doesn't matter. 90% of stuff is just all stuffed. It's either all massively stuffed or not massively stuffed. And we're hitting terminal rates on all of these interest rates. So the market's all confused to hell because we get told one thing and then the opposite thing happens. So it's all a mess at the minute. But any mean reversion strategy, whether it be Bollinger Bands or CCI or MACD or anything that relies on markets being at a extended condition before the trade is taken, will work with position trading. Because if you get in on an extended condition and the profit take move doesn't happen and they decide to accumulate and buy more, they will have to get out of these initial positions and those more stretched. And if they decide to do it again, they get more stretched. The more stretched they are, the more they have to take off, because they have targets to hit monthly and quarterly for shareholders and investors and customers. Yeah. So the pension funds, like the police pension fund, for example, that is run by Barclays or whatever. Yeah. Barclays have an obligation to supply a profit to the police pension fund on a quarterly and monthly basis. So therefore, they have to give a return on all the investments they've made. If they've made investments in the US dollar Swiss as part of that pension fund portfolio, and they need to return a profit so that they can pay their pensions, they will exit those positions. Yeah. So this is how the banks work. Their purpose is to manufacture money from nowhere, make profit. And if you speculate on something being at one level and then another level, that's how you do it. So they have the power to move it. They also have the power to unmove it when they deem fit. That's the bit you can't tell, the timing. And this is what every strategy and system on the planet is trying to do. Time the market. You can't, because you can't control it. You can see when it last time it did. It's like a bomb, yeah? Like a hand grenade. You get given a hand grenade, and there's like multiple settings on it. You can go 2 second, 3 second, 5 second, 10 second. It's like someone tossing you that hand grenade and you're going, I'm going to throw it away after 4 seconds because I think it's a 5. Yeah, because last time it was a 5, the time before that was a 5, the time before that was a 5. Unfortunately, this time it's a 3. Bang, you've lost your hand. Or you're probably dead anyway. But that's basically what happens. Everything we do in trading is based on historical information. We saw last time it did that. So the next time it gets there, you do that. But it's done it 3 times, and this is the 4th attempt, and what they do is that. You can't time it, because just because it happened there doesn't mean it's going to happen here, because what's going to happen next is nothing to do with this. You can use these, and sometimes they work, but other times they don't. It's the same with the banks. Sometimes they'll move it. And this is, I've said this about Steve Mauro's 3 push theory. Yeah. The Beat the Market Maker, Steve Mauro's work, if you're familiar with it. Yeah. It's the push, accumulation, push, accumulation, push, accumulation. Once you've had 3 pushes, you get a pullback. Sometimes you do. Sometimes you get 5. Yeah. So, yeah, that's good. Try and time it. If that doesn't work, try and time the 4th one. If that doesn't work, try and time the 5th one. If there's a fundamental shift after that 5th one and the scorecard says we need to be buying this, guys, the banks aren't going to stop at 5. They're going to go to 6 and 7 because that's what they need to do. You are riding the wave of a random thing controlled by 10 institutions in the world. It's impossible to time it. So it doesn't matter if there's news coming out that says we should be doing this. It will do what they need it to do. But you need to be aware when. So if you're piling into a position and you're really overstretched and it's next week, or let's say it's today, you've got the University of Michigan at 3 o'clock. If you're really stretched on the US dollar having dropped and you need to get an aggressive drawdown control position on because you need to get out of this position which you're in, 3 o'clock this afternoon, any time before then is when I would think, right, are we in a position where I can safely put an aggressive one on with a stop under the low? Because I know I can time when the next move is coming. This is what's going to move it. It's going to go either bang or bang. I still don't know which, but I know it will and when. Yeah, and this is what it's all about, the timing. The opening range breakout strategy has an edge and works because we know when the timing is. So it's one of the few things, and this is why the fundamentals are so important, because you don't necessarily know what is going to happen, but you know when it's going to happen. News is what moves the market. Yeah, it's not a coincidence that Wednesday all hell broke loose. It's because the New Zealand rate came out, the inflation figures, and the Canadian rate came out. That's why it all went nuts. I get it. And I say it every now and again in Telegram. People have stopped doing it, I think, because I'm always sarcastic when they do. But people will post, Jesus, what's just happened to the US dollar? If you're not looking at this, you shouldn't be asking that question. If you're asking that question, you shouldn't be trading, because this is what makes the market move up and down. And if you don't know about this, you've got no business being in this industry, because this is the only thing that makes the market move. This and this. Yeah, Russia invades Ukraine. DAX collapses. People go, why is the DAX collapsed? Christ almighty. It's obvious. But you can't do anything about it. But you need to know, right, now there's a massive Russian invasion going on in the Ukraine. We need to be paying attention to the euro and the DAX. And every time Putin opens his mouth, we need to be ready for a drop. Yeah. So, you just got to be on top of all of these things. Bank of Japan. Policy review workshop being held around December. That's not relevant, but you've got to be aware of what's going on here because it all has an impact. But it still doesn't really help you massively at the moment. But so yeah, it doesn't matter. Technical trading works extremely well in certain conditions. Other times it doesn't. Support resistance levels are amazing when they're amazing, and I trade them all the time. When they're not amazing, they don't work. But if you've got nothing fundamental coming up when you hit that level, the next news on the US dollar and the Swiss is on this day here, there's a high probability of that happening. If the next news event is here, there's more likelihood of an accumulation rather than a drop, because the banks will not want to make a big move before a major news event where the other 9 of them are potentially going to overrule them. Yeah, it's like a committee. They're all sitting there. I'm going long, I'm going long, I'm going short, I'm going short, I'm going long, I'm going long, I'm going short, I'm going short, I'm going short, I'm going short. What do you want to do? You need to be selling it because most of the banks are short on it. Yeah. Hot data. This is the futures market. This tells you what the month to 3 month outlook is from the banks. They're shorting the Australian dollar at the moment. What do you want to be doing? Not longing it, do you? If you're intraday, it doesn't make any difference. And if you're trading intra-week, it doesn't make a massive amount of difference. But if you're looking to get into a position which you may need to hold for 3, 4, 5 weeks, if things start to go against you, you're much better being positioned with these guys because they're going that way. Yeah, they're buying the US dollar at the moment. However, that will change because fundamentals shift. But at the moment, they're bullish on it. They're buying it. But it doesn't mean it's going to move this week or next week. And they usually are bullish on the US dollar. But like I say, everything at the minute is very, very up and down. And everything's all over the place. So it's virtually impossible to predict anything because the markets are jittery at the minute. They have been for the whole year pretty much. And it will get back to normality at some point. But when? We might have another pandemic before then what's going to happen? You just got to have to adapt. Yeah, if I suddenly look at this and go, right, I've lost for 3 months in a row, I will need to go, what's going on? Why is this happening? And do some analysis over the last 3 months and go, Christ, these squeezes are happening over and over again. I think it's safer to try and go in with a bit more risk and just get in on the 20s or the 15s on the RSI. If that's what would have worked better in these squeezy conditions, adapt. What you've got to do, because this changes all the time. Yeah, the US dollar is the dominant currency at the moment, has been for decades. Not looking at the US dollar Swiss, but it is the dominant currency. It's the world currency. We transact virtually everything in the US dollar internationally. That is potentially going to change with the new currency coming through China and Mexico and Russia and all this sort of stuff that's going on. So if that happens and the US dollar becomes not the world currency anymore, the US dollar is more likely to get trodden into the ground a lot more than it used to. We're going to have to adapt. Yeah, the ADRs on the US dollar might contract massively and it becomes something that's very hard to make money out of. 80% of Forex transactions go through the euro US dollar. That might stop. It might go through the Mexican peso. No idea, but we'll have to adapt. You've got to continuously be on the top of what is going on in the industry, what is going on in the news, what's going on everywhere. Everybody's just looking for the silver bullet indicator that paints an arrow on the chart, pings up an alert and tells them to press a button. You can't do that. It doesn't work. Euro yen. Wish it did. Euro yen ADR. So yen looks very weak today. At the moment, weakish, not massively weak, but weak. those are our ADRs so far today. Euro, yen, Swiss yen. So a bit of strength coming through the euro by the looks of things. Euro's running against everything. And yen weakening. Just on Take Profit Traders website, and it seems that they will have Forex soon. They've had that up there forever. Can't type. Yeah, so they've had this up here since they launched. I've been waiting. That's what brought them to my attention. They've got fantastic trading conditions, fantastic payouts, very relaxed rules, really, really good firm. I'm waiting for that. I'm waiting to see what that offering is, but I've been waiting for 8 months now, 6 months. No updates, not even a blog post about any of this. So, yeah. The problem is to put the underlying logistics in to switch from futures to CFDs is quite a big thing. The infrastructure that's got to go into place, the rules and conditions and all that sort of thing. You haven't got control on CFDs in the same way as you do in futures. So I don't know. It'd be lovely to be able to click on these, but you can't because they're cheap. I don't think they'll be doing this though. I don't think you'll find it'll be monthly. I think you'll find they will reform to the same business model as the other prop firms that do CFDs, which will be a one-time fee. If they did a monthly one with resets, that would be a bit of a game changer for the industry, I think. But yeah, good. I wish they would do it, but they're not at the moment, unfortunately. Right, I'll leave it there this morning. DAX is just a no-go this morning. I am obviously hedged, so whichever way it goes, I don't really care. If it doesn't go anywhere, obviously it's just going to be a loss today, unfortunately. So it's basically just sitting hedged in $250 pounds worth of loss at the minute. Can't do anything about that. It's just going to stay at $250 a loss until we get a stop out, and then we might get a run and make some profit. But if it doesn't run today, nothing I can do. So we'll wait and see what happens this afternoon. But I'm just staying in, obviously, the long and the short. Yeah. Now you can do it. It's stuck. All right, I'll be back this afternoon at 2:20 for the New York session. We'll trade the NASDAQ, the Dow, and the S&P, have a look at the FX market, get ready for University of Michigan, and obviously see what the market's made of today. But at the minute, it seems like it's yen weakness, euro strength across the board. US dollar thinking about having a rally, thinking about it. So we'll see. But we're literally just in rotation, it seems, at the moment. So we'll have to wait. Top step pricing doesn't seem too bad. No, top step pricing is very good at the moment. They got an offer on at the moment as well. So for futures. But yeah, top step and take profit trader are the ones. They're the best conditions, I would say. Either of them for futures, but that is if you want to trade futures. As I say, it's a completely different kettle of fish. New learning curve. And a very painful one if you get it wrong. Right, I'll leave it there. Back this afternoon, 2:20. Same time on Monday at 7:50 for the Frankfurt session. If I don't see you this afternoon, I'll be back Monday. But otherwise, hopefully see you later. And we'll see if we can pick apart what's happened this morning. All right, have a good day.